Okay, let's dive right into this. Welcome to The Explainer. Today, we're unpacking one of the most bizarre, totally counterintuitive, and frankly fascinating realities in modern retail. I want you to picture a $250 billion global juggernaut, a company literally built on absolute efficiency that deliberately loses money on one of its most popular items, every single day. We're of course talking about Costco, and their absolute legend of a $4.99 rotisserie chicken. It's not just a quick dinner, it's a profound business strategy that completely defies the basic laws of economics. So, how exactly does this work? Why on earth do they do it? And how did this one specific price tag lead a massive warehouse retailer to build its very own agricultural empire totally from scratch?
To really grasp the absurdity of this whole thing, think about a standard, everyday cafe cup of coffee. A simple latte or drip brew. In today's world, a massive 3-pound whole roasted rotisserie chicken at Costco actually costs less than that coffee. But here's the real kicker. That $4.99 price point, it's been locked in for over 20 years. Just think about what we've all been through over the last 2 decades. We've seen major recessions, runaway inflation, and absolute supply chain chaos that sent grocery prices soaring pretty much everywhere. But through it all, the chicken has stayed exactly the same price, becoming this weirdly stable anchor in a sea of economic unpredictability.
And this brilliantly illustrates the reality of the situation. If Costco's chicken had simply tracked normal economic inflation since it first debuted back in the 1990s, market analysts estimate it should cost somewhere around $11 or more today. Instead, there it sits, for under $5. And no, this isn't some happy accident where they found a magic loophole in poultry farming. Costco has actually admitted right on the record that they actively lose money almost every single time someone drops one of these birds into their cart. They are deliberately choosing to bleed profit on this item. So you have to ask, why would any rational business do this?
The secret behind this absurdity is the core psychological engine driving Costco's entire business model. It's called the loss leader. A loss leader is basically a product sold super cheaply, sometimes completely below cost, specifically designed to pull you, the customer, through those big warehouse doors. Costco knows perfectly well that almost no one walks in, buys just a single $4.99 chicken, and walks right back out. No way! You go in for the cheap dinner, but while you're there, you end up loading a giant oversized cart with electronics, a year's supply of laundry detergent, and bulk toilet paper. The chicken is the magnet. It loses money all on its own, sure, but it pays for itself many, many times over by driving massive volume on highly profitable items. To understand just how fiercely committed they are to this strategy, consider a truly remarkable admission from back in 2015. While literally every other competitor in the grocery space was raising their rotisserie chicken prices from $4.99 to $5.99 just to cover rising costs, Costco explicitly chose not to. Instead, Costco's longtime chief financial officer, Richard Galanti, admitted they chose to absorb $30 to $40 million a year in lost profit margin. $40 million, just to hold the line on a single item. They essentially decided that customer loyalty and foot traffic were absolutely worth a $40 million hit to the balance sheet. And this defensive mindset, it didn't just come out of nowhere, it is baked into the very DNA of the company's leadership. There's this legendary story about Costco's founder Jim Sinegal, when his successor, Craig Jelinek, came to him and suggested they finally needed to raise the price of Costco's famous $1.50 hot dog and soda combo because it was losing too much money. Sinegal just looked at him and said, "If you raise the effing hot dog, I will kill you." It's hilarious, it's intense, but it tells you absolutely everything you need to know. That same unwritten, fiercely defensive, do not touch this price rule applied exactly the same way to the rotisserie chicken. It wasn't just a product anymore, it was a sacred symbol of the brand's promise to you. Section 7. Taking over the farm. Fast forward to the 2010s, and demand for these chickens was absolutely exploding. We're talking shoppers building entire weekly meal plans and huge social media trends around them. Costco was selling over 100 million rotisserie chickens a year. But out on the open market, chicken producers were consolidating, and raw poultry prices were becoming dangerously unpredictable. Costco realized pretty quickly that if they kept relying on outside suppliers, they would eventually be totally unable to source enough birds to sell at $4.99 without completely bankrupting the concept. So in 2019, Costco made a monumental pivot, a decision almost no other retailer in America had ever dared to make. Instead of buying chickens from someone else's farms, they decided they were going to grow the chickens themselves. They built a massive $450 million vertically integrated poultry complex right in Fremont, Nebraska. And this wasn't just another warehouse. They literally built their own hatchery, their own feed mill, formed direct contracts with local farmers, and built their own processing plant. For the very first time in their history, Costco controlled every single step of the chicken's journey, from the egg all the way to that heated shelf in your local store.
The sheer scale of this Nebraska facility is honestly almost hard to wrap your head around. It wasn't built just to supplement their supply. It was built to completely dominate it. This single complex was designed to process roughly 2 million birds every single week. That is a staggering volume of agricultural production, entirely dedicated to protecting one specific price point in their stores. They effectively became one of the largest poultry producers in the entire country, all just to feed the machine of that $4.99 loss leader.
But here's where we really have to pause and ask a critical question. What is the exact cost of absolute control? You see, when you buy from a supplier, you're somewhat shielded from the day-to-day friction of production. But when you control the entire supply chain, you own every single problem, every single liability, and every single controversy inside it. By stepping out of the retail space and diving headfirst into the agricultural space, Costco opened itself up to an entirely new world of risk.
And that risk materialized pretty quickly. Shortly after the Nebraska complex opened, Costco faced a shareholder lawsuit alleging violations of animal welfare laws at their supply farms, with claims that executives looked the other way to protect their margins. Then, jumping to 2026, they were hit with class action lawsuits alleging they mislabeled the chicken as preservative-free. Now, Costco's legal team has fiercely defended the company, explicitly calling the claims fatally flawed, and these matters do remain legally unresolved. But regardless of the courtroom outcomes, the crucial business takeaway here is this. A decision made purely to protect a $5 price tag pulled a low-margin, high-volume grocery business directly into intense ethical and legal scrutiny that retailers usually pay suppliers to avoid.
Let's move on and see how this builds, because despite the courtroom battles and the operational headaches, the consumer response has been absolute rocket fuel. The growth has been nothing short of incredible. In 2023, they sold 137 million chickens. By 2025, that jumped to nearly 155 million, and at their 2026 shareholder meeting, they reported selling a staggering 157 million birds in a single year. The lawsuits and the ethical debates haven't deterred shoppers in the slightest. Commercially, this massive, risky bet on vertical integration has paid off spectacularly, firmly cementing the chicken as the ultimate driver of foot traffic. To really put that into perspective and humanize that 157 million number, let's break it down. Worldwide, across all of their warehouses, Costco sells roughly 300 rotisserie chickens every single minute. That is 5 chickens sold every single second. Literally, by the time I finish this sentence, dozens more have been placed into shopping carts, destined to be followed by impulse buys of giant televisions, vitamins, and bulk snacks.
So, what does this all mean? The absolutely crucial point is this. Costco's chicken isn't really a story about poultry at all. It's a masterclass in brand psychology. Most companies raise prices the absolute second their costs go up, right? They just pass the burden on to the consumer. But Costco didn't do that. They built an entire vertically integrated farming operation, absorbing incredible financial cost and significant legal and ethical exposure just to keep one single promise to its buyers. That is the real lesson here. Sometimes the most powerful and profitable thing a brand can do isn't to chase a slightly bigger margin. It's to refuse, stubbornly and publicly, to change the one thing your customers trust you never will. Which leaves us with a final thought to walk away with. Costco found their anchor. They found the unmovable object that completely defines the relationship with their customers, and they built a literal empire to protect it. So whether you're running a massive corporation, a small startup, or even just managing your own personal brand, you have to ask yourself, what is the unyielding promise you are making to your audience? What is your business's $4.99 chicken? Thanks for joining me on this explainer, and keep looking for the strategy behind the price tag.